Today we're going to talk about posting references. This new posting reference column allows for entries that are cross-references that link journal entries to postings to ledger accounts. So in this example we have a general journal on page 3. And when we refer to this from the general ledger, in this particular case the cash account, we put J3 in the posting reference column to let us know that this information was originally written down on the journal in page 3. Also, we need to journalize the fact that this information was also noted in the general ledger in the cash account, and this account number was account 100. This is entered in the posting reference column of the general journal. This proves that we posted the information in the account named cash, which has a number of 100. From time to time, all companies have to check that their accounting records are accurate and complete. This is called an audit, when the accounting records are checked for completeness and to make sure there are no errors. It's a systematic check of accounting records and procedures by an accountant or a team of accountants. Audits can be done by the company itself, which is an internal audit, or it can be done by accounting firms outside the company, and this is called an external audit. The cross-references provided by posting reference numbers helps the auditors to check the accuracy of the journalizing and posting of transactions, and really saves time, and in the end it saves money. The posting reference numbers allow transactions to be traced from the journal to the ledger and vice versa. In your textbooks on page 120 and 121, look at the journal and ledger accounts for Rainbow Painting Contractors. Here are the journal entries. We have 4 journal entries, and we have in the posting reference column, we have some numbers that have been indicated there. Let's take a look at the first example. The first transaction has 2 accounts that are affected, cash and sales. The second transaction has two accounts that are affected, advertising expense and salaries expense. These entries into these individual accounts tell us that the information was originally written down in the journal on page 12 of the journal. So if we step back, we'll notice that the journal, page 12, is where this original information occurred. So in all these cases, our posting reference is page 12 of the journal. Let's talk about opening the books. There are some steps that are involved when a company first begins operations, and this is called the opening entry. When a company starts their operations, there's a special entry called an opening entry, and it must be prepared. It records the assets, liabilities, and owner's equity when a business first begins operations. After the opening entry is journalized, the daily entries or daily transactions of the business can be recorded. Here's an example from page 121 of the textbook. On September 1st, K. Schmidt invested money of his own and borrowed $15,000 from a bank to purchase assets and start a painting business. The assets are cash of $4,000, equipment of $5,000, truck valued at $20,000. The liabilities are a bank loan of $15,000. Therefore, the balance sheet equation is the assets total, which is $29,000, equals the liabilities total, which is $15,000. We subtract 15 from 29 and we get the owner's equity of $14,000. This entry is placed in the journal and is called the opening entry. Notice, we have cash, we have equipment, we have the truck, the bank loan, and the capital. The asset accounts are listed in the debit column. The liability accounts are in the credit column, and the capital account is also in the credit column. The description is, started a painting business with the above assets, liabilities, and owner's equity. This is called a compound entry. The definition of a compound entry is an entry that shows more than one debit, more than one credit. And that's why it's called compound. Normally we expect there to be at least one debit and one credit. But when there are more of either one, we call this a compound entry. The total debits and the total credits in a compound entry must still be equal. Now, how do we open ledger accounts? When a business first opens for business, the ledger accounts must be open for each account in this opening entry that we just talked about. Each entry from the journal must be posted in the corresponding ledger account. As the daily business occurs and transactions occur, new entries are journalized and new accounts in the ledger are created. Here are the procedures involved in opening ledger accounts. You write the name of the account to the right of the word account. So we can see here for the cash account, right next to the title called account, we write cash. Then over on the far right, we write the account number, in this case 100. Then we write the year, the month, and the particular day of the month underneath the date column. We write opening entry on the first line in the particulars column. So you can see here where we have opening entry. This helps distinguish the opening entry from other entries for the transactions as they occur. We write J1 in the posting reference column for the general journal, page 1. This is where the information was first created in the opening entry. We record the amount in the correct debit or credit column. Please note that in your textbook this information was printed wrong by the printers and it needs to be corrected. So your entry under the credit of $4,000 should be crossed out and this $4,000 should be placed under the debit column. Step 7 is to enter the balance in the balance column, and depending on the balance, either debit or credit in the debit-credit column. In this case, it's a debit. Step 9, we enter the ledger account number in the posting reference column of the general journal. So we go back to the journal and prove that we have posted this information. We put this in the posting reference column of the general journal. We enter the account in numerical sequence in the ledger. Now there is a special procedure called a forwarding procedure. When an account page is filled, a new page is opened according to the following procedure. On the new page, we enter the same account name and number. We write forwarded on the last line of the old page in the particulars column with the date. So we put, in this example, the 7th, and we write forwarded. Step 3, on the first line of the new page, we write the date, the year, the month, and the day, and in the particulars column, we write forwarded. We enter the balance in the balance column. This is the balance that we have at the bottom of the previous page that was filled, and whether it was a debit or a credit. and we place a check mark in the posting reference column to let us know that we have just forwarded this from the bottom of the previous page. Your assignment for today is to complete questions 12 to 14 on our website and complete the remainder of exercise 4, parts 4B and 4C, and all of exercise 5. These can be found on page 131 and 132 of your textbook, and the work is done in your workbook.